Hello and welcome to the Friday wrap up brought to you by David Gockstein. I am your host, Landy, and today is April 3rd, 2026, and we're looking at Bitcoin to start here on the daily. And not much has changed since the Wednesday check in, or, well, really since Monday or since getting back in the range last week. And that is that Bitcoin is still kind of sitting at the bottom side of the consolidation here. A little bit directionless right now, but has locked in another lower high. So we do have some criteria to look out for here on the daily to pay attention to for a potential trend shift. And I'm going to pick the correct arrow here. Forgive me for that. All right. So as long as we see, Bitcoin holding up above around 65, great. If we do see this hold up or even not hold up, either way, the previous lower high is what needs to be closed above in order to break the downtrend. And that's going to be the lower high that I suggested on Wednesday could become a lower high depending on the Thursday candle close. And that was at 69,285 or 69.3 right now. If we do see that area closed above, that would break this daily downtrend. And I would start to look back to around 70 to 72 to take out the next lower high or try to take that area out. If we do see close above there, again, it's pretty simple. 2K at a time, 72 to 74 up here towards these highs, which were a deviation of this tighter range here. And then 74 to 76, 76 to 78, and then the main area overhead for a retest of the prior lows there at 78 to 80, at least for the daily, where things are trying to hold up before heading down and breaking the monthly at that 74 area. So this area right here is very important. 74 to 74.4 was the monthly higher low structure that was broken down from that led to the wider move down to around 60K. But if that area is, of course, if we start to see that area recovered and closed above that 74 to 76, we can look for a direct retest, rather, of the prior closing area that was holding up as support around 78 to 80. And then, of course, mid to low 80s from there, 82.5, 83, and then 86K being another big area. Of course, everybody's going to be looking out for 85, which is just a daily area relevant to, being, a number that most were looking at prior, but the actual support and resistance area of interest was around $86,000. And once that area broke down, in fact, even up here, we can see that when we started to get the breakdown below 86 is when we even went to test 80. But the last higher low, the last low, in this case, a lower low here was at that $86,000 weekly before putting in a lower high that was right around another relevant area around 89 to 90, and before heading down and actually testing this larger area of interest down here. So to the downside, pretty simple stuff. Anywhere below 65, pay attention to expansion into the area of support here down by the lows, the close open, and this spike low here at 62.5. If that area is lost, looking 58 to 60 down here. Anywhere below there, mid to low 50s, 54 to 56, fair game right off the bat. And then, of course, anywhere below there down to 52.5. If that bigger weekly zone, there's two weeklies stacked in there, and there's some higher term time frame areas of support and resistance in there that I would be paying attention to. But if that started to fall apart, that's where I'd look 48 to 50, at least initially. And then we have to entertain trips to the mid to possibly low 40s from there. Big zone of interest between 38.5 and 48 to 40 there, which was the lower high that's, really set off the bear market in 2021 into 2022. So not too much different than what we've been talking about pretty regularly. Let's go ahead and turn the Bollinger Band set back on here. And I just want to kind of point out that we can see price pretty safely test, down into that 62.5 to 65 and even swing outside the bottom side of it here into like 61.5, 62K. As long as it's closing back inside of 62.5, that's fine. Not ideal. If it starts to lose this area on a close, it would be expansion down to that 58 to 60. And then the overhead resistance, for moving averages, looking at that 20 simple by the basis band, going to be a pretty big deal. It's right around, the prior all-time high at 69K. If we do see lower term time frame prices headed up and trading above there, we can start to look for that potential downtrend break on the daily, and then right into this area where we see the upper first standard deviation of the Bollinger Band set coming in around that 70,500 on the bottom side to around that 72 to 72.2 on the top side of this tighter range up here. Any kind of trading above there would be right to the upper second standard deviation at 74. So 72 to 74, and then 74 to 76, with even some swings outside of that being the upper third. Need to see closes above there in order to get expansion to retest that overhead resistance or that breakdown. And that would be a bearish retest. So that's kind of what I'd be paying attention to for Bitcoin. Here on the weekly, ugly, lower high at 76. But if things were to bottom out here, if things were to actually bottom out here and hold this area to the downside as support, or even, 58 to 60, get a sweep, last lower high is now $76,000. That's big. Now, of course, we'd want to see progress above 78 to 80, so on and so forth, up to the mid to low 80s up here into the 90s. But realistically, any kind of weekly closes back above that $76,000 would be a trend break on the weekly, and that's significant. It's not the imminent sign of reversal or anything like that, but that would be significant in terms of changing structure on the weekly. And then from there, we evaluate, was it coming off of a higher low or equal low? Or if it was off of a lower low, right now, if we were to see closes above $72,000 on the weekly, that would be this swing up here. That would be a higher low, close and swing, I believe. Yeah. So like the close here is at 65,769. Nice. And that's even. And the close here is 65,956. So it'd be a higher low close if it were to hold this kind of structure on the close open. And the swing low here at 65. So that would be a higher low to a trend break. So that'd be a trend reversal setup to a trend break on any closes above $72,000. Now, that would not be a foregone conclusion that the low is in or anything like that. But it starts to change structure, and that's what we'd be looking for. But right now, it still favors the downside. Heavy downtrend on the weekly. Beware of continuation back to lows 58 to 60 here, and then potentially mid to low 50s from there. And even upper 40s, that 48 to 50K being fair game as well. But this is something to watch out for. Is understand that $76,000 is now the last lower high in the weekly that we need to see break in order to break the downtrend, and look out for potential continuation below 62.5, essentially, if that's the only number you want to keep in your head on daily closes to go and test 58 to 60. Otherwise, pay attention to 72 for a potential higher low close in the weekly, and 76 for a, if you watch nothing else of my stuff next week, pay attention to 76 for potential downtrend break. We're in the midst of this kind of a look. This was the bear market lows areas, building off of the initial spikes down over here that took, better part of a year to crawl its way out before we got a structural change that was significant. And, we're not there yet in terms of what I'd be looking for, but we could potentially start to see some things come to fruition and start to paint the picture of what I've been saying is we're probably looking at the macro low either coming in or being in around the end of Q3 to the beginning of Q4. All right, so we're essentially late summer to early fall is what I'd be looking for. And at least right now, provisionally. And it's kind of shaping up that way when you look at the weekly. And the potential for things to turn out that way are going to be very interesting as we keep tracking this. All right, let's look at a few other things. Now, you must keep in mind that markets were closed here in the United States today. So we are going to look at commodities. You're going to see that oil did do what I expected it to do, and that was put in a higher low on any failure to close below 98 and then run right to essentially 115, 110, 115 on any closes. And even in the lower term time frame, I'd be looking, and was looking for back to essentially 110 to 115, then, 115 to 120, with this full overhead area being 115.26 to essentially 130 being the main overhead resistance. We will be opening next week with an expansion into overhead resistance, from a big expansion to compression to re-expansion. Just beware of any close. It's really about this area over here is like, if you're longing into this area, you best be careful. 115 to 130, and then from there is essentially 130 to 140, and 140 to 150 being the main overhead area of resistance above there. I'd exercise caution on the long side. And where do things kind of fall apart for this trend on the daily? For oil, 96.50, and then really it's about 90 to 95 here. Last higher low, though, now is 96.50, so that would be a trend break, but it's still, you got to pay attention to 90 to 95. Above there, it's still got the opportunity, even in a trend break or a big spike down into that area. We got to see closes back below 90 to really start to get things back into an area where I think it would actually have some more potential to go to the downside. And yeah, that's oil. What have I been talking about? If you're looking at oil, you better go look at Dixie. And so this was Thursday's close. You've got Thursday's close for Brent, which actually did not get the same move to the upside. I'll discuss a little bit of that next week. But let's go ahead and traditional markets. No, commodities. What am I looking for? I'm looking for currencies and bonds. That's what I'm looking for. Yeah. So, the recovery back in, if we see strength in oil, see strength in Dixie, we're probably going to see some downside pressure on markets. It doesn't mean that it's going to be 1-to-1, but the more upside that we get in oil and in Dixie, the more pressure that's going to put on any kind of upside move off of the lows in traditional markets, which will, as I've mentioned, erode that bid, or essentially mean that there's not going to be as much of a bid coming in to support Bitcoin's price action and cryptocurrency price action at some of these supports if we continue to see this. Now, above the 100.40, I'd be looking for 101 to 102 initially, and then eventually up to 103, and slightly above to that 103.20, 103.50 area for any kind of a swing above 103. But essentially 101, 102, 103. Those would be big moves for Dixie. They look like smaller moves because it's not like what you might be used to seeing in some of what you trade, but in the currency world, in the Forex world, that's big. So just watch it very closely. We would need to see for Dixie a breakdown below 99.30 now. That is the last higher low. We do have higher highs, even though the open was on a higher high. I would still be aware of swings like into the 150-cent region that fail and come back down and break that. Then we're looking at maybe some significant relief, not just in oil prices. Obviously, if oil is heading down, we would see Dixie in large part being head down or being pushed down. And then we'd probably see some more relief in traditional markets, which are been very much all pressure down to some of the major support levels. We did catch some bids in the long ends, pushing yields down for treasuries, and then we at the same time saw a little bit of a move out of silver and gold. So we're kind of seeing a little bit of a rotation even in the risk off environments for money right now. And that's because there's a lot of things that have to be moved around and adjusted when you have rising oil and natural gas, or LNG. Not necessarily LNG here in the United States the way that oil is, but that would be, there's a kind of a fractured pricing structure within the oil market happening right now that can substantially can create substantial problems within certain monetary systems for energy for certain countries that provide certain things in terms of imports and exports around the world. So that has a systemic effect or a network effect for whoever they're dealing with and trading with. And it eventually works its way around the entire world. And through different asset classes and how things need to be moved to free up liquidity and that kind of stuff. So as it stands right now, that did provide for some of the move up to be a move down, essentially, in markets. They did get bought back up for Dow because we saw a little bit of rotation within Dow. We did see that after the initial big moves down on Thursday, we did get a buy back up. We got a really messy day in the actual markets here that was throwing a lot of people for a loop, and in terms of for the initial moves down, you had the gap down, a big spike up, and then essentially a consolidation for all of this. And this is where we're going to see not necessarily one-to-one moves, but beware, because if oil prices continue to rise for something like SPY, it does mean that this kind of a bid is going to erode over time, especially if it starts to get into some of those key areas, even if we start to see some of this kind of get straightened out. Now, because of the mess from the futures to open for a lot of this, a lot of people are looking at, essentially what's going on in the Friday session. And that's actually what we can take a look at. We're going to see for futures, there is some pricing adjustments and stuff that typically we could look for oil, but it's a little bit too, I want to stick to trading view. And I would like to just kind of point out that essentially we have another lower high that's a little bit more acceptable, but it doesn't change the area of interest that we need to see broken, like 46.7 to 46.8. We need to see closes above for Dow, right? And it's really about that swing down here for futures, 46K, right? It's about the same for Dow over here, 45.9 in this case, as there was a 100-point premium. So any kind of closes below there, then we have to look to 45.5 essentially, and then potentially back down to 45, right? For NASDAQ, for futures, you can look back to the big weekly level, right? That swing low, 23,666. Nice. Jeez. But closing at 24K or trading at 24K on the close there, right? And we've got here, this was 23.5. So still a little bit of a discount, obviously, for futures. Did not, it did not really affect kind of where things closed. 23.7 and above is kind of where it needed to close, into that 24K, which is what we needed to see. And that's exactly what we got, right? Just above 24K there. For SPY, need to see closes back above, for at 647, rather 648 region. Pay attention to the low, right? Anywhere below there in the 637, or I'm sorry, 637, 645. I'm looking at the beginning number. But yeah, 645, meaning outside of the lows of the weekly here. It's that 647, 648 region. Not good. Probably going to come back, test the lows. And then, closing more towards that 657, this 10-point range between 647, 657, better than not. Need to see it, getting above around that 647 is 660, 650 rather, 657. So 647 is down here, 657 to 660 to really go and take out this top side at 662. That's what you need to see. More than likely, I think it'd be more pressure down. There is value buyers in when VIX was back. VIX was back above the 30 region, and started to come down. You get a lot of latent buyers coming in as it comes down, and then they really start stepping in. Let price go at the higher it gets to 30, and then start coming back in, especially with a sustained downside move. So I would pay very close attention to oil. I mean, that's really where we're at, and we're gonna see the market really get a little wacky. I think for oil, regardless of what your opinion is on the situation, because we have such a key choke point that is being restricted for Asian countries and European countries. And we have, for those that are looking to, well, Russia's got oil and look, Russia's oil infrastructure has been under attack and energy infrastructure has been under sustained attack from Ukraine for quite a while now. Most aren't paying attention, but that actually has been what's been occurring over there for quite some time. And then there's a lot of issues in the Baltic portion where, there's different deep water port shipping routes that Russia was using and could use that are not as safe or accessible, depending on who's doing what in what areas. So understand that even with United States allowing certain things to happen from Russia and these other places, these are just temporary relief until there is actually some problem solving or some real in earnest diversions to other deep water ports for things that were coming through the Straits of Hormuz. This is going to be an issue for a while, and a lot of that pressure is actually going to be put on European nations, even more so, in my opinion, than many others. Right? A lot of the Asian nations are already making deals with the United States and others to get energy and to really race against time for reserves and that kind of stuff, especially for those nations that don't produce. But when you start looking at like the logistics side of things, we're going to see this even when the strait is open, whenever that is. We're going to see this fractured oil market, and we're going to see it get kind of crazy, I think. I don't know if it's going to necessarily get to some of the crazy high prices that people are talking about. Need to be aware of that overhead resistance. I mean, if it breaks, things are going to go crazy high in terms of pricing anyway. But I'd be careful up in some of these areas if you are a bidder. Although this is expansion over into overhead resistance, typically there's some things being done when you see prices being moved up this way. But now we've seen that oil for U.S. oil for WTI was low, and we saw Brent didn't make the same move to the upside towards the overhead resistance, which is around one. They had a common point, right? So they kind of converged at that 119 and a half, 120 area. But I think we're going to continue to see the mismatched pricing or fractured pricing in oil markets for some time, even after things get resolved in terms of the actual shipping through that particular part of the world. And the more uncertainty there is, the more flight to safety there is. So I continue to watch oil as it relates to Dixie. You can watch, different pairs, currency pairs, and then watch the bond markets if you like. But really, it's about, is Dixie getting stronger? Probably seeing some weakness in markets or the bid getting eroded over time until we find some sort of an actual price structure change in terms of a trend break. Maybe the higher high swing was enough. I don't think so. But if we do get daily trend breaks, then we need to see where things kind of fall on the weekly and kind of take it from there. So what I will say is, for those that celebrate, have a wonderful weekend. have a great holiday. For myself and others, we are going to be going and celebrating Easter. I'm going to be back a little bit earlier than I thought I was going to be in some different areas. So I'm going to be going and celebrating Easter, but then I have to take and go back to, there's some logistics stuff here as well. So I do wish all of you a happy Easter if you do celebrate. Either way, have a happy holiday if you do not. And I will talk to you all again on Monday at 9 p.m. Eastern Standard, 6 p.m. Pacific Standard Time. You can probably look for me on David's show on the breakdown at 12:15 p.m. Eastern, 9:15 a.m. Pacific Standard Time, and I will, I'll talk to him about what I'm seeing in markets and where things potentially open and head to next week. So you have a wonderful morning, afternoon, and evening, and a wonderful weekend. No matter where you are, please trade safe, and of course, as always, stay safe. With all of that being said, Landy out. Take care.